everybody, this is Candee with Century 21 Atwood, and I have with me Bryan Atwood with Atwood Mortgage.
Yeah.
And was it last week or a couple weeks ago that the feds had this conversation about what they did with the interest rate? So what does that mean to us?
Well, as a lot of people saw in the scary news, there was another interest rate hike just a couple weeks ago, right? So I got a lot of calls and texts like, oh shoot, what just happened? They just raised the rates again. What's that do for our qualification? And it was really funny because especially on this hike, rates actually went down.
They did.
They actually went down. And so one thing a lot of people understand is that the hike is not directly tied to the mortgage market all the time. So in this one, yes, they announced the next hike. They announced that there's going to be another one, and frankly, even two more. I mean, another one in March and another one in May, and rates went down. So it was really surprising to most people.
Yeah. So what does that mean for our buyers? What does that mean? You tell me.
Yeah, absolutely. And it's just that confusion that they're not directly tied all the time. The markets and investors are watching this out into the future. It's more about what they're predicting is going to happen closer to the end of the year. And so when they made this next hike, we already knew it was going to happen. And it was more about their comments saying, hey, you know what, actually, inflation is coming down a little bit. CPI data came in, so that's fantastic, that's good news. Rates actually came down a little bit because investors didn't have to have that huge margin. So the great news for buyers is there was a slight improvement. It did come back a little bit right away, which always happens. There's gonna be this little bouncing, but the great news was that we're no longer expecting these huge hikes or huge decreases. I'd love to have that, but we're not gonna have that quite yet, but we're gonna see more stability, and that's fantastic. Way easier for planning, not massive jumps, not massive decreases either yet, but the rest of this year is probably gonna be pretty stable, which makes it a lot easier to predict.
Awesome. So I think that buyers should probably call you as a lender or their other lender, whatever it might be, when they hear in the social media, oh, that the Fed's raised or things are going higher, they probably should still just check and see if those interest rates really are, right?
Always. And it can work the opposite way too, right? There can be seemingly good news, but because of how the market responded, it might have had a negative impact. That's why it's really important to have a lender that is actively watching this every single day and following these reports, because anything can happen, right?
Awesome.
We are trying to predict the future right now. We don't have a glass ball, but when they do say, hey, there was another hike, there's going to be another one, that's actually not bad news. There's a lot of silver lining in there, and that the market is going to respond well later this year. And yes, rates might be coming down, probably not much in 2023, but looming into 2024, huge opportunity, and for a lot of refinances for people buying this year and last year.
Awesome, good. Well, I think that it's still a great time to buy. What do you think?
I do. With that, the market is still growing. Housing market is still appreciating, as you know. I know in the metro we're seeing multiple offers again, which we hadn't seen for a few months. It seemed like, oh no, it's just, terrible things are happening. There's a lot of competition out there. It's still a great time to buy. Inventory is still low. There's a lot of competition, and the rates being at where they're at should not be a big deterrent. They are going to come down later, but you're not locked in to that rate forever.
Nope. One of my favorite sayings is marry the house, date the interest rates.
Exactly. Find the place you love and you want to be in forever. But if in 6 months there's an opportunity to refinance, then we're obviously going to do that. We'll help with that math, figure out, is it an okay time to do that? And we'll get that great long-term interest rate later. A lot of people don't realize that, yes, this is a 30-year loan, but 90% of those loans don't last more than 7 years.
Right, exactly. Well, you've given us some great information, Bryan. I truly appreciate it. Everybody, remember, for all your real estate needs, you can just ask Candee.